Hello, everyone. This is Mohammed Akif with Akif CPA. And then today we'll be discussing the tax forms in comparison. So, the US tax forms versus Canadian tax forms, the due date of those tax forms, and then we'll be discussing capital gain tax rates in each country. We will be comparing a lot of the forms. We'll be comparing the due dates. We'll be comparing some options that you have available for those forms in terms of the due dates, and then in the extended due dates. This is also we'll be also discussing certain other information forms, just like slips on the Canadian side, and then forms on the US side, and then the capital gain tax rate. So before we get started, I do want to point out that we have done a lot of different videos for Canadians who are living or coming to work in the US, or moving to US. Their first year of filing, how that should be, their last year of your Canadian tax return, how that should be, also what forms, what you should be thinking about in terms of retirement accounts, in terms of investment accounts, and then how the Canadian investments retirement accounts are treated in the US, how they are reported in the US, and then what some options you can utilize to simplify your tax reporting and tax burden on both sides of the border. So cross-border taxation is complicated. If you are moving from Canada to United States, I do prefer and then do recommend getting a cross-border accountant that knows both sides, that can help you with both returns. This is not just to make sure that you have all the forms. This is also to make sure that you can do some tax planning, to understand how things are treated on both sides, and then simplify your returns for the future years. And then this is very important because a lot of Canadians, when they move to the United States, of course they're moving for work and they're moving for different families, for different reasons. And then you want to make sure that your cross-border taxation is simple. You want to make sure that your cross-border taxation is manageable, where you can understand how this is working for you. And you don't want to end up in a situation where Canada is not taxing you, the US is taxing you, the US is taxing you even more than the Canada does, and then the whole point of you moving, where you're trying to make more money, starts slipping away. So make sure you get a good cross-border accountant where they can help you understand how things work on the US side, how things work on the Canadian side when you move, and then to help you simplify your taxation, the cross-border taxation. So let's get started. I will be sharing some screens with you to go over some of the forms, the due dates, and then we'll take a more deeper dive into this. So let's start with the forms. Let me see. All right. Okay. Perfect. All right. So let's make this bigger. All right. So on the screen that you can see, I mean, I'm sharing with you is we'll be discussing the names of the form, what number they are on the US side. So this is all the US side. What numbers are the forms on the Canadian side in comparison? And then what are the due dates? So initial due dates for both of them. So US initial due dates, Canadian due dates. And then if we do have extensions, that's only on the US side. What are the extended due dates? So again, when you see this information, the forms on names on the left hand side, and then what are the numbers on the US side, and then what are the numbers on the Canadian side, the due dates for both of the countries. So let's get started. The first thing first, I do want to point out is that the biggest difference between the US forms and the Canadian forms is the tax system is the extension. On the US side, for individuals, and for the businesses, we have extensions. And this extends your filing due date, not your tax due date, but your filing due date. The tax due date is still due on the day the initial filing is due. So this is something that the Canadians are not aware of when they move. I do want to point out that this is something that is free, without any cost. And then for a couple of years when you are living or when you are moving and this is you're new to the country, I do want you to take the advantage of filing these forms. It is very important because it can give you some time to plan, to understand, and then to really see how things are on the US side. So the extension form is 4868 for the individuals. That gives you, so it's your due date. Technically, when we talk about the 1040, which is the form that is on the US side, this form can be extended by filing form 4868. All right. So the due date for the 1040 is April 15, and then the extension due date is also the same as April 15. So this form is due on April 15, so this will extend your due date till October. So May, June, July, August, September. It gives you 6 months of filing extension. And then I would, if you are here, if you are, this is your first year, this is your second year, third year, whenever, I will recommend every time getting this extension. It is free of cost, and I'll share the form with you, where you can see how this looks, and then what you need to do to get this done. So, all right. So this is the form 4868. I mean, as you can see, actually, it is automatic extension. This is no question asked extension in order to extend the filing due date of form 1040, which is also T1 on the key inside. So I'll go into details. So this is technically a paper form. I mean, you can also e-file it if you're filing through a software. It's a very simple form. You put your name, address, social security number, your spouse social security number. This is for the tax. And then so I'll get back to the tax, and then so you fill this information out, and then mail it in. The address that you need to mail is at the bottom of the form. It says right here where to file. If you are making a payment, how or where this form is going to go, depending on the state you're living in. If you're not making a payment, this is where the form is going, depending on the state that you are living in. So this form it's a very simple form. Even if you don't understand the tax liability part, you don't calculate it, I would say put 0 there and mail it in. And then that's the biggest favor that you can do yourself. So mail it in, and then whenever you mail it, make sure it is certified. If and then I would recommend mailing it through USPS, not FedEx, not UPS. Mail it through USPS, and then get the confirmation of the filing, have it registered, and then make sure you have a copy of that, and then track it. The date on that filing or the mailing should be April 15. That's the due date of this form, same as the 1040. Mail it in, and then have the extension. So let the IRS process, and they'll give you 6 months to file your tax return. So let's get to part 2, the individual tax. So if this is your first year, you don't understand how this works. Technically, the tax is due on April 15. So if you have your W-2, if you have your other forms that needs to be filed, do a pro forma return, meaning that you put your information down, see what it's going to look like. If you owe some money, go ahead and pay that tax. Even if you think you will not owe money at the end, but go ahead and pay that tax. It's just going to save you from penalties and interest if you file really at the end of the 6 months, because the tax is due on April 15th. So this is how this is happening. If you don't know, maybe you will owe a couple thousand here and there. I would say just make an estimated guess and then send the payment in if you can. All right. So make sure that you use this form. This is one of the biggest difference between Canada and US. Canada does not give you any extension, but the US does. And then so I would recommend getting this extension as soon as you can. You don't have to wait for April 15 to file this. You can file early on. After January 1st, you can literally file this form. And then so this is the form for the individual, which is also T2 on the Canadian side. So 1040 is what we're discussing here. So 1040 is the individual tax return on the US side, and then T1 is same on the Canadian side. Of course, the 1040, initially the filing due date is April 15. And then on the Canadian side, the due date is April 30th. All right, so that's you're coming from Canada, I assume that you will know this. And then so this is the form that 1040 and T1 is comparable. These are forms. So let's get to the next individual tax return. So non-resident tax return. On the US side, the form is 1040 NR. Notice that it is still 1040. It just we add NR to the end. On the Canadian side, it's still T1. The difference, one of the main differences that you can see on the form on the top, it says non-resident return versus resident return. The due dates are similar on both sides. We do have so due date for the non-resident is for Canadian is April 30th still 1040 NR. If you are in the US, it's still April 15. Let's move to the non-residential return income. So on the US side, technically this is a schedule. So this goes that is part of a 1040. So let's say Schedule E can be part of a 1040 or 1040 NR. On the Canadian side, we do have a special return, which is not part of a T1, which is called S216. This is technically an election on the Canadian side, and then that's how the return is due. And the due dates are June 15. So the due date for this is June 30th. That's the date for the S216. That's the date on the Canadian side. I think we made a mistake on this one. So there you go. So we made a mistake on this one. So it is June 30th, the S216, the tax and the filing is due. For the S216, you gotta make sure that either you have an NR4, NR6, or a pro forma statement attached to your return for the IRS to process the refund or any tax due, for CRA to process. I'm sorry, so for CRA to process your tax, refund or tax due. So this is again, these were all the personal tax returns, the individual tax returns. I'm getting to the business ones now. So partnership, S corp, these are all businesses. We do have a separate extension form for corporation, partnerships, and state extension, which is 7004. I do want to share with you how that looks like, so you can see what I am seeing too, and then we can be on the same page. So this is the 7004 form, which is again extension to file business income tax returns and other returns. This is also due on, so this one, the due date depends upon your business due date. So for states could be different, for partnership corporation it could be different. Simple form too, you put your name, the tax ID number, and then you figure out what form you're asking the extension for. The forms we normally, when we are talking about Canadians who are coming to the United States, the biggest one we'll see will be Form 3520A, which is the trust form. On the other side, if you do have businesses as a Canadian, 1120, which is a corporation form, 1065 is the partnership form, and then 1120S, which is the S corporation form. These are the common ones that we will normally see for Canadians. So this is a simple form again, 7004. You fill it out. No, there's no what was I'm going to say? I'm sorry, I'm forgetting some things here, but there is no extra payment for this form. You just simply file it in, and then you get the extension. Again, make sure you use USPS to file these forms, and then make sure you have the confirmation and the tracking in order to have proof that you filed this form on time. Now let's get back to the forms that we were discussing. Okay, so there's a lot of moving back and forth again. So let's go to partnership. So on partnership, the form on the US side is 1065-1065. On the Canadian side is T5013. That's the comparable form. The 1065 is due on March 15th, at the end of the tax year, which is, let's say, for example, on the US side, majority of the businesses will be ending their tax year on December 31st. So when we're talking about year end, the individual is by default December 31st, and then the US side majority are also December 31st. That is not the case for businesses. That is not the case on the Canadian side. The Canadian side, everybody goes on a different fiscal year. Sometimes it is September, sometimes it's December, sometimes it's June, depending upon what the company is doing. Everyone is a little bit different. On the Canadian side, there's no set date, but on the US side, majority of the companies will be December 31st. of the businesses. So partnership, March 15 is due date for the US form, and then for the Canadian is 5 months after the end of the tax year. So within the 5 months you have to file. And then for the S corp, of course, we don't have that on the Canadian side. S corp is 1120S. The due date is March 15. And then the corporation, which is similar as T2 on the Canadian side, the form is 1120. And then the equivalent form of the comparison form is T2. The difference between the partnership and S corp is that the corporation due date is the same as the individual tax due date on the US side, which is April 15. So, you will see that April 15 is a due date for 1040, and it's also the due date for the corporation. On the other side, the Canadian Form T2 is due on, within 6 months of the year end. So technically, if it's a December 31st, then you have June 30th to file your T2 corporation forms. Now let's get to foreign assets. Foreign assets are reported on FinCen 1148938. We do have other requirements too, but these are all individuals. What we are talking about. So this forms do apply to corporations too on the US side. So this will be the common form. The due date is the same as your individual due dates. So if you have an extension on your 1040, which is I will recommend you always get, the form 114 also get extended by default. So there is no separate extension for form FinCen 114. It is filed with the FinCen department. That's a separate department than the IRS. But there is no separate extension. The extension for 114 form is linked to your 1040. So if you have an extension on file, then they will accept that extension and extend the due date as the due date of the 1040. So initially, this reporting is due on April 15 for the US form. The equivalent form on the Canadian side is T1135, and then that is due on April 30th, which is same as your T1. Let's get into details. So if you own a foreign corporation in the US, let's say a Canadian corporation, if you are, you will file a form 5471. It's not as much as comparable, but we can say T1134 requires almost the same information as 5471, which is crazy. This form is getting longer and longer and longer. And then I feel that this is a lot of information going to the CRA when we talk about T1134. And then which is also true for 5471. I think this is ridiculous. This is crazy. With the amount of information they're always requesting, it's just too rigorous. So 5471 is on the US side. The due date is the same as your 1040. So you can see a lot of the forms are linked to your 1040. The due dates are also linked, and that's the reason I would recommend getting an extension. The reason is that we have huge filing penalties. The tax penalties are separate, but filing penalties are huge on the US side, especially when it comes to foreign reporting. Let's say in the case of 5471, this gets into thousands and thousands of dollars, and also other forms. Also 54, the FinCen 114, this is, the penalties for not filing willfully, or reporting otherwise, 50% of the account value. That's the reason I want to make sure that you guys have the extension. You understand the importance of the extension. It's not only about filing on time, it's also about reporting properly. So make sure that you understand the importance of that extension. So whenever you can, I would say as early as you can, file the extension, so you have time to put things together. Make sure you report everything right, because the penalties are just big. They're just too big. I don't think so we should be dealing with those. On the Canadian side, the T1134, which is equivalent to 5471, is due at the end of the 10th month. So if you are a individual, of course, this is due on by October 30th, 31st, and then if depending upon if you are a business, when is your year end, that's how this is due. One more thing that I do want to get to is the trust reporting. So on the US side, we have two forms, 3520 and 3528. Both of these forms have a different due date. Make sure you understand this. They are not linked together. 3520 is due on April 15 for the US. And then 3528 is due on March. I think the dates are copied wrong, but it's due on March 15. Make sure that you understand 3528 is due on March 15, not excuse me, not on April 15. So when you have these trust reporting requirements, you can see from your tax return, you can see what forms were filed. Make sure you get that extension into, because that is very important. Again, the filing deadline, filing penalty is huge for 3520A, and then you can use 7004, that I form that I showed you earlier, to file the extension. So this is not on 4868. 4868 is only linked to your 1040. That's the only form it's linked to. So it's March 15 that you have to file. I'm going to save this again because I'm not sure what was happening. We did fix this, but this is so 3520. Of course, is a form that you can. It's on April 15, and then this is 3520. It's March. So again, you can have extensions. Make sure you do have extensions. And then I will say, if you do have a reporting requirements for 3520, 3528 on the US side as a Canadian, make sure you get the extensions. So for 4868 and 704 on the and the Canadian side, if you have a trust reporting requirement, it is reported on T3. T3 is reported no later than 90 days. So technically, you only have 3 months on the Canadian side to file the trust return. So, which is crazy. I don't think so. A lot of people will be able to do this, but this is what the CR is asking for. So these were some of the comparisons of some of the common forms on the US side. The Canadians will see where they can understand how this is playing out for them, and then they can understand, okay, this is what the form is on the Canadian side, this equivalency on the US side, understand how the due dates work, how the extension works too. So the reason I keep emphasizing on extensions for Canadians for US return is because I do want you to use them. There are just so many things happening that you don't know about, or you might not know about. So I would rather have more time to understand, put this together, than trying to rush this in just because there's a due date. So that's number one. I'll get into so some of the information reporting forms. Technically, just like when you get a T4 and then or W2 on the US side, how these forms are. So these are reporting forms. Mortgage interest, technically this is reporting on the US side. 1098 is a form that you get if you do own a home on the US side. It will report your, if you have an escrow account on there done through your mortgage, meaning that the mortgage company is taking money for your interest, for your insurance and your property taxes, then you will see the insurance and property taxes along with the interest that you're paid for that mortgage. On the Canadian side, we normally get mortgage statements. There's no special form. Interest, you will see a lot of the US forms are 1099. Interest is 1099 INT. Dividend income on the US side is 1099 DIV. So there is no separate, there's no one form on the just like the Canadians, where Canada has T5 and then everything gets reported on that T5. But this is not true for the US. The US, every form is going to be a little bit different. The capital gains losses are reported on 1099B, which is also T500A. Some cases, some T52. There's a big difference between how the capital gains are reported in the United States versus Canada. In Canada, it's very simple. The per market value when you sell, the cost, everything is calculated. But that's not true on the US side. US reporting has long-term, short-term, and then basis being reported, securities uncovered, covered. There are other forms, there are other boxes that you need to check on before you can file the return, because that's how the reporting is being done. I'll get into capital gains more after this reporting information. So salaries on the US side, we do get it reported on W2. On the Canadian side, it's T4. On the gambling income, of course, gambling income is taxable in the US. So the gambling income will be reported on W2G. There is no gambling income tax on the Canadian side, which means that in Canada the income is not taxed. Retirement accounts. Retirement account, if you have pension coming from the US, 1099R is the form that is being used. 10T4A these are the forms that are being the same information being reported on the Canadian side. We will put up these forms, this information on the website for you to look at, for you to compare, and then see how things are similar and different in terms of the forms, the reporting forms, the due dates, and then the extended due dates on the US side. These are all the forms, the common forms that we have gone through. Now we'll be jumping to capital gains tax rates. So capital gain tax rates is a little bit different when it comes to United States. In the U.S., the capital gains are divided into two. First of all, the capital gains are divided into two different sections, which is one is classifications, one is short term, and then capital gain, and one is long term. And then how do you know what is short term? Short term technically is anything less than a year. So if you buy and sell in less than a year, that is considered a short term. Anything more than 1 year considered a long term. The tax rate is also dependent upon if it's short term or long term capital gain. The short term capital gains are taxed at ordinary rate. So whatever your tax rate is going to be for your personal return, that's how the short term tax will be applicable on the gains. If for the long term, the rate depends upon your filing status and your income level. And then the rates are 0, 15, and 20. That's the maximum you will pay on your capital gains. But again, the rates for capital gains for long term are dependent upon your filing status and your taxable income. So I'll share with you what I'm talking about. So if you are single in the US, and then your taxable income that includes your capital gains is less than 44,000, this is for 2024, I believe, is going to be zero. So if you are married filing jointly, you can make up to 89,000, including capital gains, and you will pay zero capital gain tax rate. So if you are in the higher bracket than this, the next rate is 15%. So let's say if you're married filing jointly, if your income is between 89,000 and 553,000, your tax rate is going to be 15% on that capital gain tax, the long-term capital gain. If you are single, if your income is between 44,000 and 422,000, your tax rate is 15%. And then goes with other filing statuses, which we have head of household, married filing separately. If your income is above, if you're single, if your income is above 490, the next is 20%. So if your income is more than 492,000, your tax rate is going to be about 20%. That's anything above this is 20%. So married filing jointly 553,000 and above, you're looking at 20% tax rate. So on the long-term capital gains. So again, there's a difference between how the capital gains is classified on the US side versus Canada, where Canada, it doesn't matter if it's short-term, long-term. On the US side, we do have short-term and long-term, and the rates are dependent upon your filing status and your taxable income. In comparison, on the Canadian side, things have changed quite a bit. I'm going to share how things have changed. So after June 25th, 2024, let me pull up this information so I can see the same screen as you are. Okay, all right. So on the Canadian side, you can so the capital gains have changed, the inclusion have changed. And then so after June 25th, 2024, individuals will so the way the Canadian tax was working was that you will always include 50% of your gain. So if you made 100,000, only 50 will be taxable, 50,000 will be taxable on your ordinary rate for individuals. That has changed. So if your capital gain exceeds 250,000, now in the inclusion amount above that 250,000 will be 2/3. It will not be half. Again, if your capital gain is more than 250,000, anything above 250,000 will be included at a 2/3 rate versus a 1/2 rate. So this is after 25th, June 25th, 2024. Before, it's all 50%, and after June 25th, 2024, for individuals, it is 2/3, anything that is exceeds 250,000. For corporation, they have gone away with whole 250,000. There's no such thing as 250,000 for businesses, and then you have to include 2/3 of your capital gains. So there is no half. There is no exemption for 250,000 for just same as individuals or for corporations. Everything is included at 2/3. and which is a big change because previously it was only 50%. So if you had a lot of long-term games, let's say on the US side versus the Canadian side, and in some cases we have seen where Canada, you end up paying less taxes. This is a rare equation on the Canadian side, but I've seen those instances too. So a big change. Anything before June 25th, of course, is this old regime, which is 50% inclusion. After 25th, June 25th, 2024, two-third for the corporations, and then 50% up to 250,000 for individuals. Anything above 250,000 will be two-third. And then these everything is taxed at the ordinary rate. That means whatever the tax bracket you are falling into, this is how the included capital gains will be taxed on. So these are this is what I want to share with you guys, especially for Canadians who are coming or moving to United States. I've talked to so many of you guys, and then majority of the time there's a whole gap between the information when they find online. It's hard to put everything together for them at one place and then trying to explain, okay, this is how the US forms are versus the Canadian form. So if you're thinking about this is how it would look like on the US side. If you're thinking about in Canada about this form, this is where this information is being reported on. So I had many conversations. I was like, you know what, we need to do this and then do this for our fellow Canadians so they can compare and see how the due dates are. It will be easier for them to find all this information in one place where it can help them make decisions. Secondly, so if you anything else, you can below comment. We have done other videos too. If there's other topics that you want us to cover, we can cover those too. You can comment that also in below. Anything, you can reach out to us at info@cpa.com, and we'll be happy to respond. And thank you.